Trade ahead.
For average people, the mechanism behind banking is a mystery. They don't understand it and they don't care. But they should, because money concerns everybody. So please pay close attention, so that you will understand how you too can profit from helicopter money. So, most people think that if they buy a house and take a mortgage, that it is the money of depositors that the bank lends them. But that is not how it is. If the bank lends 100,000 euros or dollars to Harry, it does not tell Dick, "Listen, Dick, I have taken 100,000 out of your savings account, because I have lent that money to Harry as a mortgage." All savings remain neatly in the accounts of depositors. So, where do those 100,000 come from? Simple. The bank enters left on its balance sheet the mortgage deed that was signed by Harry, and enters 100,000 on the right side of its balance sheet into the account of Harry. Harry is happy because he can buy the house. And the bank is even more happy, because the value of the mortgage deed, including interest for a number of years, is in total 150,000. The bank made a nice profit on this transaction of 50,000. And that with money that they just created out of thin air. So now you know where all that money for big bank buildings and fat bonuses comes from. It is hard to believe that a bank is allowed to do such a thing. Yet this is the way it is. But a bank must have buffers. About 11%. But that means that they can still lend out 9 times more money than people have in total in their savings accounts. Before the credit crisis of 2008, a lot of banks, including Lehman Brothers, had even put out 32 times more money than they had in accounts. Indeed, an insane system. It should not be allowed for banks to use money that they don't have. They should first have to borrow that money from a central bank, like Fed or ECB, against payment of interest, so that excess profits end up at a central bank, and not in the pockets of private banks. But it gets worse. At the moment the bank gives Harry his mortgage, it added 100,000 of fresh money to the money in circulation. This peculiar phenomenon is called money creation. But Harry must in total refund 150,000. And those extra 50,000, the bank did not create. Because of the loan there is now a deficit of 50,000 in the money in circulation. And with every loan that a bank gives out, it creates more debt than there is money. The deficit is ever increasing, until eventually the system breaks down. The amount of merchandise is no less. But consumers have less and less money to buy all available goods. Yes. Deflation. Companies at some point cannot sell all of their products. They have to lay off people, so that then consumers have even less money to spend. One company after another goes bankrupt and does not pay back loans to banks. Then it turns out that banks have far too little buffers and get to the point of tipping over. And that is where the taxpayers are called upon to fork out money to bail out banks. Things shouldn't be that way. It is the job of a central bank, Fed or ECB, to bail out banks. And they would easily be able to do so, if they had in good times received interest on loans they gave out to commercial banks, instead of allowing those banks to create money out of thin air. So the cause of a crisis is a shortage of money in circulation. Now, Ben Bernanke, the Fed's boss in 2008, and Mario Draghi, head of the ECB, are of course not completely retarded. They have learned from the crisis of the 1930s and know very well what the problem is. It is a shortage of money in circulation, created by the interest business. To deal with that deficit, Fed and ECB buy up loans out of the market and pay for them with fresh money. That way more money comes into circulation and a deep crisis as in the 1930s is avoided. But, is the problem truly solved now? Of course not. The interest business just goes on. And Fed and ECB cannot keep on buying loans indefinitely. So what then? There is not one, but there are two problems. 1. The buying power of consumers is too low and inflation just will not go back to the desired 2%. 2. Unemployment is too high because of not enough investments in economic activity. The loans that Fed and ECB buy up, are bought from banks, pension funds and investment institutions, who then receive fresh money that they can invest in companies, to increase production. But what good does it do to increase production, if there is too little buying power to buy more products? Buying up those loans does not solve the problem of lack of buying power of the ordinary man. What then should be done? Very simple. Fed and ECB must ensure that consumers have more buying power. But how then? By not only creating fresh money to buy up loans, but by using part of that money to go directly into the wallet of consumers. Yes, but how? It doesn't matter. Even Ben Bernanke stated that the worst of the crisis of the 1930s would have been avoided by showering fresh money out of helicopters. So Fed and ECB must make sure that governments reduce income taxes by giving them fresh money as a percentage of their gross domestic product, so that everybody has more money to spend. But central bank, Fed or ECB are also banks. If they create fresh money, they want to have a deed against that money on their balance sheets. Showering the money with helicopters will not give them a deed. And no government will sign an IOU for that kind of money. But they don't have to. It is enough if they are committed to do their share to reverse the process if inflation gets out of hand. And why would it be a problem? If Fed or ECB at times have a negative balance. So, the first step must be to no longer allow commercial bank to put out money that they don't have. They must borrow it from the central bank and have to pay interest on it. The second step is to bring inflation back up to 2% by supplying fresh money to governments, provided that that money is exclusively used to reduce income taxes of all people. The third step is to reduce unemployment by supplying more loans to commercial banks, if necessary with a negative interest rate. A bank borrows 100,000 from the central bank and pays back only 90,000 in fixed repayments over 10 years. That money can then be lent to companies that, for example, pay back 93,000 in the same way, only when times of positive interest are alternated with times of negative interest. The interest business finally stops to only create deficits. It will be balanced against surpluses in bad times. If inflation runs out of hand or the economy is overheated, it is easy to reverse these processes. But now we get to the point. How will you get your share of this free money? The money lobby is of course all-powerful. But we still live in a democracy. So use your vote to force politicians to make these necessary changes.